Okay, let's take a look at question number 4. Question number 4. There are 4 parts, 3 parts of this. The first one is about inventory write-down. Okay, so 2 types of raw materials are required to produce a product. Each unit of finished product requires 3 units of raw materials number 1 and raw materials number 2. Okay, and the processing cost is 34. The following provide information on inventories at year end. First, evaluate these inventories to determine the amount of write-down, if any. B, would your answer change if replacement cost of raw materials number 1 were $11 per unit? Okay, so let's work on this one together. Okay, so here, let's take a look at finished goods first, right? You always do the finished product first. You see the cost is 171. Net realizable value is 151, right? Remember, inventory needs to be reported at the lower of cost and net realizable value, right? So which number is lower, right? The net realizable value is 151, that's lower. Your cost 171. So we have to do a write down here. How much are we going to write down? So we're going to do the difference in the cost, 171 minus 151, and times the number of units, 800. So it's going to be 20 times 800, 16,000. Write down, right? On inventory, finished goods inventory, finished goods inventory, right? Okay, and then are we done? We are not done, right? Remember, if there's a write down on the finished good inventory, right away you have to take a look at the raw materials inventory, right? You have to test on the raw materials inventory. Okay, so for raw material inventory, because the product requires both raw materials 1 and 2, right? So now we have to make the assessment on the group, right? These 2 materials, right? Okay, so let's take a look at, let's calculate the cost, okay? The total cost of the group, your raw materials 1 plus raw materials 2. So what's the cost for raw materials 1? So that's $9 times 150, right? And what's the cost for raw materials 2? So that's $55 times 110. Okay. So this gives me 1350 plus this one will be K 55. So 55. So that's gonna be 605, 650. Okay, so that's gonna be 7,400. Okay, 7,400. So that's the total cost of the group, right? I'm going to compare it with the replacement cost. Total replacement cost of the group. So for the replacement cost, raw materials 1 is $16 times 150, and for raw materials 2 is $50 times 1100. Sorry, 110. Now I have 2400 plus 500. That equals 7,900. Okay, so that equals 7,900. So you can see that this total replacement cost is more than total cost. So no write down, right? No write down. Okay, no write down. That's the first part. The second part asking, what if the raw materials is not 9, it's 11? Okay, so the question is saying, I need a different pen. Okay, here. So the question is saying, what if the raw materials cost is not 9, if it's 11? Okay, so then my numbers will change, right? So this number is gonna be 11. I need to add 300. So 1650. Okay, and this number is gonna be 770. Second, is that right? If sorry, oh, I'm sorry. If the replacement cost, okay, here that if the replacement cost is 11, I'm sorry. We're not talking about the cost. So if the replacement cost, okay, is not 16, if this is 11, okay, so now this number will be 1650. Okay, and now this number is going to be 71, 7150. Okay, so then the total replacement cost is going to be 7150. That's going to be less than 7,400, less than total cost. Then you have to write down the difference. 7,400 versus 7,150. That's 250. Write down 250. Okay. So that's the first question. Now let's take a look at the second. The second one should be pretty easy, right? This one you have known from your even introductory financial accounting. Okay, so the periodical inventory system, if you use, okay, sorry, I haven't read the question yet. So basically you are provided with information about inventory information from last year, beginning, the number of units and cost. There are 3 bunches of purchase, the units, the cost, okay, and then if you add the beginning plus the purchase, that's the total goods available. That's going to be 30,000, okay, units. The company is using periodical inventory system, okay, and the year-end account is 3750. So you calculate the weighted average cost per unit for the year, right? So for periodical inventory system, you only do this at the year-end, right? So you only need to calculate one time this average. So the weighted average cost will be the total cost of goods available for sale divided by total unit of goods available for sale. Right? So what's the total goods available, total cost? Well, you start with beginning inventory, 8,000 times 21 plus 7,000 times 24 plus 10,000 times 29 plus 5,000 times 26 and divided by total units of the sales. So this one is 30,000. If you add this up, this four number up, you get 30,000. Okay. So here, the first one would be 168,000 plus, which one is gonna be 168,000. And this one is gonna be 290,000. Next one will be 130,000. Okay, and divided by 30,000. So if you add them up, these two we are going to have 833,000, and this two is going to be 420,000 divided by 30,000. If you add it further, 657. Right? So this is going to be $25.20 per unit. Okay. Next question: calculate the ending inventory value and the cost of goods sold for the year. Okay. So ending inventory cost equals the unit cost, that's 25.2, right? We just calculate this, times the number of units. So that's, this number is given 3,750. So you're gonna get 9,450. Okay, so that's your ending inventory. Okay, and if you remember the inventory equation, total goods available for sale should equal cost of goods sold, those sold plus those unsold. That's in ending inventory. This one we calculated. So 756,000. And cost of goods sold is unknown. And ending inventory we calculate. So my cost of goods sold is the difference of the two numbers. So the difference of the two numbers is 005. And that's going to be a 1. And it's going to be a 6. Oh, 661,500. So that's my ending. That's my cost of goods sold. Okay. So that's 4B. Let's take a look at 4C. Let's take a look at 4C. Chinook began operations on January 1st, 2019. Merchandise purchase and 4 alternative methods of evaluating inventory for the first 2 years of operation are summarized. Okay. So purchase, Okay, ending inventory, and under different method, there are different numbers. Required A, which of the four methods listed above does not apply the matching principles? Briefly explain. Well, you know, FIFO is matching principles, right? Especially for those physical flows, right? First items, first out, right? And specified identification, those are for the large items with large dollar value, but low volume, right? Low volume, low transaction volumes, such as antique collections stuff, and average cost, right? So these three we all use for the cost model, right? Because it recognizes the matching principle. But the lower of the cost in the market, the lower of the cost in the market is not matching principles, right? The lower of the cost in the market. The inventory has to be reported at the lower of the cost and the market value, okay? That's just how we measure inventory, the value of inventory. Okay, so B, determine the cost flow assumptions of inventory valuation method that would report the highest net income for 2019. So for 2019, okay, in order to have the highest net income, you are going to have the lowest cost of goods sold. So only if you have the lowest cost of goods sold, you can have the highest net income. If you have the lowest cost of goods sold, that means you are not selling too much. So you should have the largest inventory, right? So if you compare the three methods, which one has the largest inventory balance? And the answer is this, FIFO, right? The FIFO, 238,000. Okay. And C, assuming that FIFO had been used for both years, how much would the cost of goods sold be for 2020? So for 2020, okay, the cost using the inventory equation, beginning inventory plus purchase equals cost of goods sold plus ending inventory, right? So for 2020, right, for year 2020, okay? So for year 2020, what's your beginning inventory? So 2020 beginning inventory is 2019 ending inventory, which is 238,000. Okay. So here is 238,000 plus purchase, right? What's the amount of the purchase for 2020? Here, that information is given, 850,000. Okay, cost of goods sold is unknown. What's the ending inventory for 2020? That is here, 188,000. Okay, so if you solve cost of goods sold, you should get 900,000. Okay, that's this question.